Hello, everyone. Today I want to speak directly to physicians about something that matters deeply to your financial future: the importance of being conservative in your stock and bond investments. As a doctor, you have worked incredibly hard for years, through medical school, residency, and the demands of practice, to earn a strong income. That income is a tremendous advantage, but it also comes with unique pressures. You carry student debt longer than most people. You face the constant risk of malpractice claims, and your schedule leaves little time to monitor markets or chase opportunities. This is exactly why your investment approach should be built on steady, consistent growth rather than excitement or speed. The smartest path for physicians is to let your money compound quietly over time with minimal drama. A well-balanced mix of broad, high-quality stocks, funds, and quality bonds gives you the growth you need while protecting the capital you've worked so hard to earn. Stocks provide long-term appreciation, and bonds add stability and income, especially as you move closer to retirement. The goal is not to double your money in a single hot year. The goal is to grow your portfolio reliably, decade after decade, so that when you decide to slow down or retire, your wealth is simply there, ready, secure, and untouched by unnecessary losses.
Dollar cost averaging into low-cost diversified funds month after month is one of the most powerful tools you have.
Markets will rise and fall, but history shows that patience and consistency win far more often than timing or brilliance. You do not need to outsmart Wall Street. You only need to avoid the mistakes that can set you back years in a single bad decision. This is also why I must warn you: be extremely cautious about chasing fast returns. The lure of quick profits, whether it's a can't-miss biotech stock, a private real estate deal promising 20% annual returns, or the latest cryptocurrency story, has ruined far too many high-earning professionals. Those temptations almost always carry hidden risks: lack of liquidity, high fees, or outright fraud. When something sounds too good to be true, it almost certainly is. Even more concerning, many physicians are specifically targeted by promoters of risky investments. You are seen as busy, successful, and often too trusting with your money because you simply don't have the time to investigate every pitch. Some advisors push high-commission products, speculative ventures, or complex strategies that benefit them far more than they benefit you. Others dangle exclusive opportunities that sound prestigious but expose you to concentrated risk. If an investment requires you to act quickly, sign complicated documents, or commit a large portion of your portfolio, that is your signal to step back and say no. Protect yourself by working only with fiduciary advisors who put your interests first, by keeping your investments simple and transparent, and by remembering one unbreakable rule: your primary job is to practice medicine, not to become a professional investor. Your portfolio should be boring enough that you can forget about it for months at a time. Because boring, consistent growth is what actually builds lasting wealth. By staying conservative, disciplined, and focused on steady compounding, you give yourself the freedom that every physician deserves. The peace of mind that comes from knowing your money is working safely for you and your family. You've already done the hardest part by becoming a doctor. Now let time and prudent investing do the rest. At Advantage, we manage money for doctors using evidence-based strategies that are balanced, rational, and designed for long-term success. Our founder, Daniel Horowitz, has a simple philosophy: worry about your patients, not your money. His investment strategy is based upon his father's investing maxim: I don't go to weddings and I don't go to funerals. Daniel's father grew his philosophy as a money manager for the Metropolitan Opera and American Ballet Theatre in New York. His point was this: steady growth over time is better than rapid ups and rapid downs. Chasing the next apple is tempting, but the data is clear that investing as gambling is a losing strategy. If you are ready to commit to long-term growth and the power of compounding your gains, call Advantage and set an appointment with Daniel to discuss your long-term financial plans. We are fiduciaries, so your interests come first. Call us at 925-299-6720 to discuss building wealth using evidence-based conservative strategies. Again, that number is 925-299-6720.